Well, good day, all. Ira Epstein, and here we are with your Spider ETF update, and we're at about 6:28 p.m. Central Time. Time got away from me right there. Interesting day on this Tuesday, the 20th of June. Obviously, my heart goes out to those people on the Titanic submarine, whatever that name of that little thing is. I hope it's intact, and I hope they're going to be okay, but it's all over TV, and it's obviously, how do you get them out? I mean, they're 13,000 feet deep. Very few things can go that far down that anybody has. So, it's one thing to send a little thing. How do you get a line down and attach it and whatever's got to be done? We all hope it's just floating somewhere, and maybe they're out of electricity. But I understand the hatch can't even be opened from the inside. Okay. So as we looked at the markets today, I felt it was more of a pullback, an attempt at a consolidation. We started failing in stocks. If you really looked at the indices on Friday, they had gone up, made higher highs, and most closed lower. And then today when we reopened, we were down again. So, okay, that's the pattern that was there. That doesn't mean that it's over on the upside. This market has a way of finding itself, and as you know, it finds support. Now, we do have Fed Chair Powell speaking tomorrow before the House committee. Then on Thursday, he speaks before the Senate committee. So he's going to get drilled on policy. Does he say something hawkish, dovish? Which way? How's he going to sound about the economy? That's all going to be important. Certainly, there was a great piece of news today. I don't know if you saw the housing starts and permits. I fell over when I saw them. I think the starts were up 25%. They were looking for a small decline, a negative number, and not a positive, not a pullback from a prior week's, a decline, and under zero. And they didn't get it, okay? And then we saw the permits jumped a big amount. So obviously, the shortage in housing is making things get known. Even cars are in a shortage. I'm reading an article about used car prices, and I don't know how you keep up with all that, but I do. Now, they have certainly peaked in most cases. They've come down sharply, but they've stopped declining recently because you just don't have a lot of cars coming off the rental lots where they put them out. There's not a lot of cars coming off leases. People are realizing that, hey, when my lease is up, I'm better off owning that car. I can flip it on my own or just keep it than I am giving it back because the price that it was in your lease is probably too good of a price. Parts are going down in price. There's more products showing up in terms of getting them what they want. But the manufacturers are deciding to produce the most profitable car, not the least profitable. And that's what you're forced to deal with at this point in time. I bring up the cars because one of my things I'm looking at, I believe that Fisker, Rivian, they have been underperforming. And if they can grab hold, I think they'll be interesting. Now, what Rivian did was they just signed, just now, a deal with Tesla to modify their vehicles so they can go to all the Tesla's charging stations and charge up. They're still, they say, going to go ahead and build their own. I don't get the logic of that, other than they want to be in the charging business. And there's probably other companies that can do it better than them. Why not just concentrate on your auto manufacturing and let it go at that? A little bit of a surprise to me. Let's talk about Rivian, because remember, it was down here and it's come off those lows. They're important lows. The market's got a pattern. It seems to get this pattern of higher lows, higher highs, gets up, corrects, and doesn't go back each time to the lowest low that you had on the chart. That's a chart that's starting to build a bit of momentum to the upside. The market is now fighting a battle between you can see it, the green line, the 100-day average, down to the 18, and for the first time, it started popping to the upside. Very important. It got thrown back on Friday, up today. And the reason it's up today is they announced that deal with Tesla. So it gave the market a little bit of a bump and up 5%. Where's the resistance? It's right here. So don't think I am saying, hey, you want to buy this right here into a Bollinger Band. You'll never hear me say that, okay? It's not going to happen. And you're starting to get into overbought territory because any reading over 70 is there. But what I do think is unless something really goes sour in this company, I don't think you're going back into these levels, and I think it is something that we got to keep our eye on. Now, Schwab, as good as they looked early on Friday, they gave all that up, and today a bit of follow-through. Now, is this going to be a stellar company again? I happen to think they will. I think their products are great, and I think if we can get past the point where we keep getting interest rates hurting them. Now, one of the things that helped them on Friday was obviously the idea that the Fed went into its pause this week. Market peaked out there, though, and pulled back. It's not ready to do anything just yet on that chart that I'm seeing. In gasoline, it's time to be out of this. If you were watching me on futures, we had talked, and the futures call was a really good one because you had a bearish embedded reading you lost in that gas. That worked. And in this market, you've had the higher lows, higher highs. And each time you get to that Bollinger Band, it allows you to come out, and it's often back to the 18-day average, the red line, before it makes a run. Now, it is overbought. Overbought doesn't interest me. I'll step back a little bit on that. Financial services, to me, first challenge of a combination of a 200-day average, 100 in green, and a Bollinger Band, you own it. I don't want to own it anymore. That is where the market often fails. Now, to prove it's going to fail, you got to lose the embedded reading. This has to close under 79. Tomorrow will be an important day. Will it make that, or is it going to try to run back up here and fight the battle? It'll be one of the two. I think the pro money took a lot of money off the table. Those that are long, I think they'll watch the momentum, close under 79. I think they'll bail on you. In XLI, here too, you're waning in the embedded reading, but you haven't turned it down. You got to get under 79. So I think the pros are buying on this break in here. I think they'll get out if you get a reading under 79, and they're still looking to get all the way back there. NVIDIA proved itself great. It is holding together, keeps making the higher highs, but SOX did not do that. SOX today was a big disappointment. It lost the embedded reading. It closed 77.35. I think the pro money ran out of it today. If it closes back over 80 tomorrow, they can get back in like that, but I think they ran in a big way today. In the home builders, I mean, this is just pretty powerful stuff. Look at all these homes, 25%. 25% new home starts. Permits up 5%. I mean, market wasn't looking for anything remotely like that. It was actually looking for further contraction. So now you're seeing that the home builders are responding to the lack of inventory. Now remember, you start now with your starts. How long does it take to build a home? 9 months, year and a half, something like that. So that's what I think you're going to be dealing. I'm talking single family there. And then if you saw the multiple dwellings, that number was double digits. So things really are humming. We're going to get, I think, existing home sales tomorrow. So you want to pay attention to that. Lower highs, lower lows in the energy. Is it going to make a run for the Bollinger Band? I think so. The market's got momentum pointing down. You just got into your first bear phase. I think the pros will go short at 79.82. It stops over that high, but you got to be careful. When you get to sideways Bollinger Bands like this, don't look for the breakout. It'll come eventually. This is very early in that. I'm not convinced it's right now. In the gold market, look at how you went down, challenged the Bollinger Band, and held in the market. Now, you are oversold. You've hit your downside target. This was the washout number. Now what's next? The one thing I can tell you is I don't want my clients to own yet the gold miners or the silver miners. I don't mind XME, but I mind these. Now, we've got a pattern of a higher high, lower low, no trend there. Copper market. Copper's disappointed in waiting. It keeps thinking that China's going to pull the trigger and give, and rightly so, do something with stimulus. What they're doing is they keep cutting every interest rate they can think of by 10 basis points and thinking that's going to spur on their economy. It isn't, friends. They need to get more. It is great news that Blinken and his counterparts at least talked with the Chinese. You got to break that we're not going to talk to mentality. He didn't walk away with anything, but I don't think that was the goal. He tried to get the militaries to open that line where they can talk. Didn't get anywhere. Don't ask for too much on the first meeting. You had the meeting. They didn't have to take it. That's the good news, okay? If in copper you close under 79 and you've got an 80.46, then I'm going to argue you're going back to the 18-day average before you get over that high. So a crucial day in copper tomorrow. BND, I like BND. It finally responded the way I thought it should because I'm looking at what's going on in interest rates and we're in a pause. You know, you may not get a rally, another hike, if you will, in July. We just don't know. Got to see the data. If the data is strong, you're going to get a July hike. This was hey, I wanted to see what things were. We haven't accomplished our goal and we're not there yet. Let's hike. Let's see the data. Too soon to know. But this market is fighting a battle between the 18 and the 200-day average. If the 18, we get over it, I could get a bit excited on the long side. UUP, the dollar. Looks like a bounce coming, but that's all that I think it is. You've worked off an overbought condition up here, lost the embedded reading, hit all your downside targets. I can see rallies, but I think the pros want to sell it. And I hear a lot of people talking bullish dollar. I'm not in that camp. In FXE, I'm in the bull camp here, but I need better pullback in the markets. You don't buy that vertical rise off their rate hike last week. No, let the market pull back and you trade it on your better terms. And that's what I think you want to do with these markets. You want to be ultra careful, cautious with what you do. Now do yourself a favor. Go to our website and take advantage of the many free offers we have. It's iraepstein.com. On the top left, you'll see free offers and get used to a lot of our videos like these. They're right on the home page. They're very easy to see and so on. I'm Ira. You have a great day. I'll talk to you all tomorrow.